Hey everyone, ready to get into some serious finance. Today, we're going to be looking at BlackRock.
Blackrock.
BlackRock. They manage like $10.6 trillion.
Whoa,
It's more than half of the entire U.S. GDP.
that's a lot.
Yeah. Wild, right? So we're going to be using this YouTube video as like a jumping off point, to figure out just how they got so big and
Yeah.
and what it means for, well, for everybody, basically.
Makes sense. What's really interesting about BlackRock is how much they're involved in like everyday life.
Oh, yeah.
Yeah, this video, it looks at their connections to everything from like your bank to the clothes you wear.
Really?
Kind of makes you think twice about, all the stuff going on behind the scenes.
It really does. In the video, it asks some really tough questions. Like is BlackRock just riding the wave of the American economy, or are they, kind of shaping the world to benefit themselves?
Right.
We're going to get into all that.
Yeah.
But first, the basics, right? Well, what does an asset manager, what do they even do?
Okay, so imagine you have a bunch of money that you want to invest,
Okay.
but you don't have the time or the knowledge to pick stocks and all that.
Right.
That's where these asset managers come in.
Okay.
They take money from clients, like individuals, companies, big institutions, and then they invest that money,
Makes sense.
hoping to, grow it over time.
So they're like financial middlemen.
Yeah, exactly. but on a huge scale.
Okay. And in BlackRock's case,
Most of their clients are what are called institutional investors.
institutional investors.
So that's like pension funds, insurance companies, university endowments, things like that.
Gotcha.
But we really look at where that money comes from. It's from regular people.
Really?
Your retirement savings, your insurance premiums, all that could easily be part of BlackRock's portfolio.
Huh. So they're managing trillions of dollars, and most of it isn't even theirs. But there was something in the video I found it interesting. It said that BlackRock makes most of their profits not from how well the investments do, but from the fees they charge their clients.
Right. That's a key point. It means that their business model is all about getting as much money as possible and managing it, just so they can get those fees.
Okay.
It's not really about how much their clients are earning. So, that raises some questions about what their priorities really are.
It's like a gym membership.
Oh,
They get your money whether you go or not.
that's a good analogy.
Yeah.
Okay, so now let's add another layer to this. Index funds. Remember those?
Yeah, they're a type of mutual fund, right? It's
Yes.
like a bunch of different stocks all bundled together, like
Mhm.
buying a piece of the whole market instead of just betting on one company.
Exactly.
Yeah.
And the great thing about index funds, at least for the asset manager, is that they're cheap and easy to manage.
Yeah.
You're not trying to beat the market.
Right.
You're just trying to match it. BlackRock calls this passive investing. It's like their whole thing, basically.
Yeah.
But the video, it points out that with how big they are and how much influence they have, it's kind of hard to call it truly passive.
That's where the whole universal ownership thing comes in, right? BlackRock and State Street and Vanguard, the video called them like the big three.
The big three, yeah.
And they own a bit of practically every company out there,
Yeah.
every publicly traded company.
It's crazy when you think about it.
It is.
They might only own like a small percentage of any one company, maybe like 3 to 10%.
Right.
But they own that little slice of almost everything.
Wow.
The video used Amazon as an example. Together, these three, they own more of Amazon than Jeff Bezos.
No way.
Yeah.
That is a lot of power in the hands of just three companies. And the
Mhm.
video said this universal ownership could lead to higher prices and less competition. They even gave some examples from the airlines and the athletic wear industries.
That's one of the things that really makes you think about this video.
Yeah.
It asks, are there conflicts of interest here? If these asset managers own shares in companies that are competing with each other, does that mean they're not actually competing, on price or innovation? It's a question that economists are debating.
Yeah.
And it's something that, affects us all.
So it's like BlackRock is this passive giant,
Right.
just mirroring the market with their index funds. But at the same time, they're huge. They own pieces of so many companies, and it just makes you wonder,
Yeah. It's a paradox. And it's something we're going to keep looking at as we, keep going deeper into this,
Yeah.
into how BlackRock works and how it affects the global economy. But let's switch gears a bit. Let's talk about shareholder democracy
Shareholder democracy. Okay.
and how these giant asset managers, how they might have changed the game.
Okay, so the way I understand shareholder democracy, it means that when you own stock in a company, you get a say in how that company is run.
Right.
You vote on things like, who's on the board of directors, or if they should merge with another company, or even, how much the executives get paid.
Yeah, that's the classic idea, right? The idea is that
Yeah.
if you give shareholders a voice, then companies are going to act in a way that's best for the people who own them.
Mm.
But the video makes it clear that today it's a lot more complicated than that. All these asset managers, they've concentrated the voting power,
Right.
and that could be a problem for this idea of a democratic system.
The video actually said that the top 1%, they now own 50% of all the corporate equity and mutual fund shares. And the top 10%, they own like 86%. So what does that mean for the rest of us? I mean, how does this concentration of ownership, how does that actually change how companies are run?
Well, that's the big question. And the video, it argues that this shift, it's taken power away from individual investors and given it to this small group of very powerful asset managers. And these firms, a lot of the time, they just vote the way that the company management wants them to.
Mm.
So they might be putting short-term profits and returns for shareholders above everything else, even the long-term health of the company or the interests of workers and consumers.
So it's not really shareholder democracy then.
Yeah, the video called it shareholder oligarchy.
Wow. So what does that mean, like, in the real world? What are the consequences of this?
Well, some people say that this is a big reason why we're seeing these, negative things in the economy, like wages not growing, less investment in research and development. Some even say it's a reason why companies aren't doing enough about climate change.
Mm.
The argument is that if companies are just focused on quick profits for a small group of shareholders, then they're not going to invest in things that benefit everyone.
So, like, my retirement savings, just sitting there in an index fund, it could be, contributing to all these problems.
Yeah, it's a disturbing thought. But it also raises another question. If BlackRock and these other asset managers are so powerful, aren't there, any rules or regulations for them?
Yeah, good point.
That's where things get even more interesting. That's where we start to look at BlackRock and its relationship with the government. Remember the revolving door that the video
Oh,
mentioned?
yeah. That's where people go back and forth between working for the government and working for these big financial companies. It's like musical chairs, but with a lot more money and power involved.
Exactly. And the video, it shows how BlackRock has used this to their advantage. They've hired a bunch of people who used to work for the government,
Hmm.
which means they have, insider knowledge,
Right.
and that could influence, their decisions.
Mhm.
They even managed to avoid stricter oversight after the 2008 financial crisis.
Oh, yeah, the Financial Stability Oversight Council, the FSOC.
Right. The FSOC, they wanted to label BlackRock as systemically important, which would have meant more rules and regulations.
BlackRock didn't want that.
They lobbied against it, and they won.
Yeah.
And they even got to do what the video called self-certifying their passivity. Basically, they got to audit themselves.
Wow, that's
It's quite a deal if you can get it.
It really is. This is a lot to think about. We've got this idea of asset management, the potential downsides of universal ownership, BlackRock's connections to the government. It's a lot. But the video, it leaves us with a big question, right? Like, BlackRock doesn't own everything, not technically, but they do control a lot of the financial system, through their investments. So
Right.
so what does that mean for the economy and for us, for everyday investors?
That's the trillion-dollar question, right? And it's something we'll keep exploring in the next part of our deep dive. We'll look at what might happen because of this concentration of power, and we'll look at what some people think we should do about it,
Sounds good.
and we'll try to figure out what all of this means for for our own money and our own financial well-being. So stay tuned for that.
Definitely will. So we're back, and we've been talking about this video about BlackRock, and it's pretty clear that they have a lot of power in the financial system, right? It makes you wonder, like, if BlackRock and State Street and Vanguard, if they're all kind of connected and maybe looking out for themselves first, where does that leave everyone else?
It's a valid concern. The video definitely seems to suggest that this concentration of power, it could be a big reason why we're seeing some of these economic problems, like income inequality, wages not growing, the cost of living just going up and up.
Right, and that whole thing about shareholder democracy turning into shareholder oligarchy.
Yeah.
Kind of scary when you think about it. It's like regular people have less and less say in how these big companies are run.
Yeah, that's a big point the video makes. That old idea that if you own stock, you get a voice.
Right.
It's not really true anymore.
Seems like it.
When all the voting power is in the hands of, like, a few big asset managers, the interest of individual investors, workers, consumers, they can get lost.
It's a bit of a depressing picture, but are there any like counter arguments to this? Is there anything good about having these big asset managers
Yeah.
around?
Well, it's important to remember that BlackRock and the others, they don't operate in a vacuum. They're still subject to regulations, oversight from government agencies like the SEC.
The Securities and Exchange Commission,
Right.
so it's not like a free for all.
No, but
That
but the people who are critical of the system, they say that the regulations, they're just not strong enough. They can't really handle the risk that comes from these companies being so big and so connected to each other.
like the 2008 financial crisis.
Exactly.
Yeah.
That's a perfect example of what can happen when there's not enough oversight.
And we saw how BlackRock lobbied to avoid stricter regulations after that, right?
Yeah, yeah. They argued that, their passive investing model, it wasn't as risky as the way banks or hedge funds work.
Okay.
But some experts think that their size, how much money they manage, plus their connections to other financial players, it could still make the whole system vulnerable.
So what are some of the solutions people are talking about? Like, how do we fix this? How do we make the system more fair, more transparent?
Well, there are a few ideas out there. Some people say that asset managers should be more transparent. Like, they should have to tell everyone how they vote and how they interact with the companies they invest in.
That seems reasonable.
Right. If they're going to have so much influence, we should at least know what they're doing.
Yep.
Other people think there should be stricter rules about how big these companies can get,
Yeah.
maybe even limits on what they can invest in. And some people are even talking about strengthening antitrust laws
Yeah.
to stop this universal ownership from leading to less competition.
Those are some pretty big changes.
Yeah, it's not an easy problem to fix.
Yeah.
But the first step is knowing about it, right? Like, once we understand how these giant asset managers work and what kind of impact they have, then we can start talking about how to make a financial system that's fair, that's transparent, that works for everyone, not just a select few.
This whole deep dive, it's definitely changed how I think about investing. I used to think it was just about, picking stocks and hoping for the best.
Yeah.
But now I see how it's connected to everything, the economy, politics, even things like income inequality. It's a lot.
Yeah, I think that's a great takeaway. This whole thing with BlackRock, it shows how these financial concepts like asset management, they're not just abstract ideas. They have real effects on all of us. It's a reminder that we should be more engaged, question the way things are done and demand a financial system that works for everyone.
The video also talked about how these big asset managers, how they might be contributing to things like income inequality and wages not growing. It's not a nice thing to think about.
No, it's not. Yeah, some people say that when the economy grows, everyone benefits.
Right.
But this video, it challenges that idea.
Yeah.
It suggests that the benefits of growth, they're not being shared equally. And this concentration of wealth and power, it might be making things worse.
The video used the example of worker pay, right? Like how BlackRock and the others, they could be a reason why wages are growing so slowly.
Yeah.
It's weird to think that my retirement savings could be, supporting practices that hurt workers.
It's a valid concern. The argument is that, if these asset managers are only focused on short-term profits and shareholder returns, then they're going to push companies to cut costs. And that often means cutting costs on employees.
Right.
So lower wages, fewer benefits, less job security.
It's kind of a scary thought that the system is working against the average person.
It is. It makes you want to, really look at where your money's going
Definitely.
and who's benefiting from it.
This has been eye-opening. So we've talked about the downsides of, all this power being in the hands of these asset managers, but are there any good things to consider, any counter arguments?
Of course. The people who support the system as it is, they say that asset managers like BlackRock, they're actually vital to the economy.
Okay.
They say that these companies allocate capital efficiently. They give people and institutions a way to invest. And because they're so big, they can lower costs for investors.
So it's not all bad.
It's complicated. There are arguments on both sides.
Right.
We have to weigh the risks and the benefits and think about what it means for the economy and society in the long run. It's not black and white.
A lot to think about. But thanks for explaining all this. It's definitely clear that BlackRock and the other big asset managers, they have a lot of influence.
Right.
And we need to understand how they're using that power
Absolutely.
and whether it matches up with our own values.
I agree.
It's wild, right? We've been talking about all this stuff with asset management, BlackRock, and it just keeps coming back to that point the video made, about how they may not technically own everything, but they've got a piece of almost everything.
Yeah, that universal ownership thing, it really makes you think they're everywhere.
Yeah.
But the video, it said that might not be all bad, right? Like in theory, these universal owners, they should want the whole economy to do well, not just one specific company.
Right. It's not about like squeezing every last dollar out of one company. It's about the big picture, the whole system working. The video even said that. Like, BlackRock has been hired by governments to help with financial crises.
Oh, yeah.
So maybe they're not always the bad guys.
It's complicated.
Right.
They definitely have, the money and the people to help solve big problems, climate change, inequality, all that.
Mm.
But will they actually use that power for good? Or just to make themselves richer? That's the question.
It's almost like they've got this huge amount of power, but they don't know what to do with it. Or maybe they do, and we just, don't see it.
That's a good way to put it.
Yeah.
It does make you think about what happens when so much power is in the hands of just a few.
So what does all this mean for us? Like, for regular people, how should we think about investing or saving or even just, buying stuff, knowing what we know now about BlackRock and how much influence they have?
I think this whole deep dive, it shows us that we need to be smarter, more careful with our money.
Mm.
We should ask questions about where our money's going, how it's being used.
Okay.
We can support companies that, do things we agree with, and we can, tell our elected officials that we want a financial system that's fair and honest.
The video did mention that some regulators are, starting to look more closely at asset managers, especially the ones that own a lot of banks. So maybe things are changing a bit.
Yeah, there are definitely people trying to make things better, more oversight, more transparency. The Consumer Financial Protection Bureau, the FDIC, they're looking at ways to, keep a closer eye on these companies.
Okay.
But like we saw in the video, BlackRock and their friends, they're fighting back against those changes.
Sounds like a bit of an uphill battle. How can regular people, make a difference in a fight like that?
Well, we can support the groups that are pushing for financial reform. We can hold our elected officials accountable, make sure they're working to create a financial system that's fair and transparent.
Right.
And we can educate ourselves, talk about these issues with other people.
Mm.
The more people know about this stuff, the better.
It's good to remember that even though, finance can seem really complicated and confusing, we all have a part to play. All our choices, they add up. We can make a difference.
Yeah, exactly. And don't forget, knowledge is power. The more we know about how the financial system works, who the big players are, the better we can navigate it, right?
Yeah.
And fight for a future that's fair and more sustainable for everybody.
Well, this deep dive into BlackRock, it's been a wild ride. Fascinating, definitely eye-opening, and yeah, a little scary at times.
I agree.
It's given me a lot to think about.
It shows us that, the world of finance, it's not some separate thing. It's connected to everything we do. What we buy, the jobs we have, the future we're building for ourselves and for our kids.
So next time you hear the name BlackRock, remember, it's not just some company name. It's a powerful force shaping the world. And we all have a part in deciding what kind of world that's going to be.
Couldn't have said it better myself. Thanks for joining us for this deep dive. Keep learning, keep asking those tough questions, and let's keep working towards a better future.